Hey traders, a very warm welcome to you. So we're probably familiar with support and resistance trades, right? It's a case of we have some support. And by the way, if you're not familiar with what support and resistance is, go and check out previous videos I've done on how to draw support lines, resistance lines, etc. So if you're brand new to that, go and check it out, bookmark this, come back and watch this video. Okay, so we have a support line here, and that could be where price has pushed multiple times. We know the score behind that. And we have a resistance line here, perhaps where price has come up once before and it's coming up again. Support and resistance. And the idea behind that is we are either going to trade a fade play against it. So we're going to go short there, or we're going to go long here. Now, we might use a breakout strategy, but generally speaking, let's stick with this strategy, which is fading support and resistance. And the breakout strategy comes in naturally with why this all works. So let's talk a little bit about why this works. Okay, why does support work? Why does resistance work? What is the whole point of it? Well, if we imagine that we have supply demand like on a seesaw. So we have this scenario here. We've got I think Americans call it teeter-totter, something like that. Anyway, get the point. Kids park, two kids on the other side. So you've got on there, pressure on the buy side, pressure on the sell side. Let's imagine now, use our example of this is support. Price is coming down to support. What is actually happening at this point here? That's the point we're most interested in, because we're assuming that when price revisits that, the same thing is going to happen again if we're buying at support. Okay, so what is actually happening? So we've got this supply demand here. We've got buyers and sellers both pressing on price in one way or another. Now, if we had a massive amount of buyers and a massive amount of sellers, price is going to go nowhere. For each buyer, there has to be a seller. So it doesn't matter how big or how much volume the buyers are putting through. If a seller is taking out as well and is at the same price level, price will not move. What moves price is when there's a big buyer or a big seller and the other side is slightly less. So they keep dropping down in price, dropping down in price, dropping down in price, causing the price to go lower. So in this example here, let's say we've got, tell you what, let's get a red out and let's get a blue out as well so we can kind of differentiate between the two. So we've got here Mr. Seller or group of sellers, whatever, hitting price, and we've got Mr. Buyers here, because don't forget that for every buyer there has to be a seller. So there's never more than one or the other. There's always has to be the other. The reason that price moves is that one is more aggressive than the other. One is prepared to pay higher price or a lower price than the other. That causes the price to move. So that's something to always bear in mind. So we have this scenario here now. Sellers and buyers are pretty equal, right? Nothing's happening, nothing's moving. Say 10 are being sold, 10 are being bought, 10 are being sold, 10 are being bought, price is not moving. Now all of a sudden, the sellers decide to get a bit more aggressive. So a bit more weight comes on to the sell side. Let's put another little stack of weight on here just to represent kind of more volume coming through, more selling volume coming through. And the buy side isn't able to match this. And so because they're able to match this, and this seller's reasonably interested in getting his order done, what happens is the price steps down, the price steps down, the price steps down, the price steps down. And in fact, you might even find that some buyers start to drop off, and this will cause an acceleration in downtrend. So that was our initial thing there. We might find that group of buyers drop off and it becomes even less. And of course, that's going to cause even more of an acceleration. If you imagine the analogy of the seesaw again, that's going to shift it right into one direction. Great, we get the concept of that. So one thing to note here is there's two ways that price can be moving down here. And we've shown both. One is that we have more aggression on the sell side coming in. The other is we have less aggression on the buy side. So two variables to change. We can add more weight here, like on the seesaw. We can add another child on there to cause it to move that way. Or we can take one child off and put a smaller child on to still do the same thing. So there's two sides that we can adjust to make the price move. So in this instance, we've had more sellers coming on and we've had buyers dropping off. So two ends have been adjusted. So, okay, that's great. We understand now why the price is going lower. So what is actually happening at our sweet spot here, which is our support level? And we're assuming that we're going to come down and we're going to hit the support again. We've got a long order there. We're looking for a long. We're looking for it to go after the stratosphere and make a lot of money. Okay. What happens when the price comes down to there? we have the imbalance, we have the sell side, and this is pretty much how it's going to look, isn't it? You know, we're going to have this here because there's more selling pressure coming on. When we hit this price point, and let's say this price point, for example, is 97, just any old number I've picked off the top of my head. Now we have a scenario where for the price last time has turned around. So at some point we have to have the equilibrium back. So two things, one of two things has got to happen here. Number one, we can have buyers stepping back in. So let's say, okay, I'm going to rub this out and we're going to have buyers stepping back into price here. And they're going to step in as well, and they're going to match that amount of selling pressure. They're going to stand on that bid and they're going to match it. So we've now got an equilibrium in price and in buying and selling. So all of a sudden it stops. So there could still be the same selling pressure, but buyers maybe have thought, hey, last time I bought here, it worked well for me. Or maybe it's a large resting order that's just literally sitting there and it is scooping up a lot of that pressure. Could be somebody waiting for that level, then come stepping in and running an algo. Any number of things. The point is simplifying it. It's just more buyers stepping in. Or, as we learned from before, what we could have is this scenario where, okay, the same amount of buyers are still there, but all of a sudden, these sellers drop off. And that creates our equilibrium. The sellers that were hitting it and hitting it and hitting it, who were more aggressive, causing the price to go lower, have suddenly got to this level and said, I don't want to pay any less than 97. I don't want to pay less than 97 for whatever reason. It doesn't really matter. The point is they then come off the throttle and we get back to this equilibrium stage. And that is the equilibrium stage. Okay. Now what causes price to push back up is the opposite of that. So all of a sudden now we have two things that can occur. Can you think in your mind what they're going to be? It's either going to be the sellers drip off a little bit and think, you know what, I don't want to sell it anymore, and we get rid of that, and that creates the equilibrium on the buy side, or creates more pressure on the buy side, should I say, causing us to lift up. Or buyers see it at 37 and think, hey, that's great value, it was there before and it bounced up before, or whatever reason. They step in, put a big block of buying pressure on the price, and it's going to shift it now back in this direction. Okay, and that's going to cause us to lift back up. So do we know this is always going to happen? No, we don't. But this is what is fundamentally happening at all turning points in the market, is the supply demand is just shifting, whether that's increased demand, whether that's reduced supply, both giving us the same result. But just in thinking of that in your head next time you come to a support and resistance trade, what's happening, how is price shifting? Am I expecting buyers to step up here? Or, could it be that sellers are backing off a little bit? Is it a mixture of both? Do I see anything specific that indicates to? Now, to be honest, does it matter which one it is? It doesn't. But one final thing, guys, is that if you can imagine there's two ways of affecting one shift in the seesaw, in the supply demand, if you get both, and this is when you get these extreme rip moves from levels, you're going to get a double whammy, aren't you? If all of a sudden the sellers dry up and just disappear completely for whatever reason, they back off, and it gets with news, often news, sellers are hitting, or some news comes out, then all of a sudden we have a massive stack of buyers, like big buyers are stepping on here. We've got hardly any sellers. We'll always have some sellers, but we hardly have any sellers. These guys, if they want to get filled, they're going to have to pay more and more and more and more. And that causes price to absolutely rip up. And that's when we get those violent kind of moves in the price of the market, wherever we're trading. All right, guys, that is it. That's the theory behind support and resistance, supply, demand, imbalance. Let me know your thoughts in the comments section below. If you like this video, please give it a thumbs up, and don't forget to subscribe for more videos from me and other traders on this channel. Take care, good trading. I shall see you on the next one. Goodbye.